Well, good morning from here in London, and good afternoon from over in Mauritius. And I am delighted with some anticipation to launch the 33rd edition of the Global Financial Centers Index with my colleague Mike Wardle and our special guest today, Mr. Thakoor. Now, you'll know me, I'm Michael Mainelli. I'm one of the directors of the ZN Group, and it really is my privilege to be able to introduce so many of these events over the years. But the Global Financial Centers Index is very special to us. We can only do this because of the tolerance and generosity of our many sponsors, whom you can see here before you. Our sponsors allow us to range widely and freely across technology, economics, and finance. But actually, probably the most special thing is that we produce 3 indices on a regular 6-monthly basis. This index, the Financial Centers Index, also the Global Green Finance Index, and the Smart Centers Index. And the story behind them is an interesting one, that we actually began these back in 2005 in cooperation with the City of London Corporation, who was trying to find a way to assess multiple centers against each other and see the progress globally, with the intent, most interestingly, of cooperation far more than competition. And I would ask you to view the presentation today in that light. It is as much about cooperation, showing society the financial centers do good work, as it is about, and it is truthful, that there is a little bit of competition with each other. Now, the format today, as you can see, is I'm here to get out of the way as quickly as possible so that you can hear from our experts. We're going to have a welcome from Mauritius to the results, and then my colleague Mike Wardle will spend about 15 minutes going through the results themselves. I would like to make a few observations at the end, and then we'll be turning to questions, comments, and any answers that we might be able to provide. May I suggest a few things? Firstly, yes, this is being recorded. Secondly, the slides will be available, but more importantly, the report is available. It is already available. This is the launch, and you can catch it online in the chat room or search for it on the ZN site at zyen.com. One of the things that we'll be doing is posting this recording as soon as we've tidied it up editorially, and you will be able to share this with friends and family. There will also be a couple of articles starting around the world, and you'll probably be catching the GFCI over the next week or so as various centers comment on it and their positions in it and the alterations that are there. However, you are here online with us, and we're delighted at the turnout today, and we would like to have a conversation with you. So at 9:35 or even before, please type your questions, comments, observations into the chat room, and we will feed them into the discussion with Mr. Thakoor and with Mike. One of the things that I can say is that all of your questions, comments, and observations will have your email attached. And so if we don't have time to answer them, or if it's a point of little detail, or you'd like to get in touch with any of the three of us, please just type into the observation area and we will get back to you over the next day or so. I think that covers all of the, what I might call the housekeeping rules. So if I could, I would just like to turn to the commentary today. We had a focus on Mauritius just the other week, which you can view. It's quite a lengthy discussion of Mauritius, its place in the world, many of the changes and improvements that have been made. But we're delighted today to welcome Mr. Thakoor, or Bikash, as he's said that we can call him. Bikash is the Chief Executive of the Financial Services Commission of Mauritius. He holds a master's degree in information technology, electronics, and systems automation from Lille, France, and has an MBA with a specialization in finance. He has spent over 25 years as a central banker and really knows the area and the sector, and it's a delight to have him join us today. So Bikash, if I may, the floor is now yours.
Thank you. Thank you, Professor Michael Mainelli, the Executive Chairman of the ZN Group Limited. My good friend Mike Wardle, Chief Executive Officer of the ZN Group Limited. And of course, all our distinguished participants, ladies and gentlemen. Good morning and perhaps good afternoon, depending on where you are joining us. It gives me tremendous pleasure to be amongst you virtually to deliver this keynote address for the launch of the Global Financial Center Index number 33. As this year marks the 16th anniversary of the index, the FSC Mauritius is proud to contribute to its release, together with the Z Yen Group from Mauritius. The index remains a quintessential benchmark which is followed by and issued for investors and financial decision makers, as it provides evaluations of competitiveness and rankings for the major financial centers around the world. Ladies and gentlemen, last week, and as pointed out by Michael, we had during another virtual seminar organized by the Z Yen Group Limited, we spoke lengthily about the Mauritian jurisdiction. And today, I am very glad to share with you insights of our funds industry from Mauritius. The country has established itself as a leading jurisdiction for setting up and administering funds. It is widely recognized by both fund managers and investors, and is commonly used for structuring international investments, particularly into Africa and Asia. In the recent years, it has gained popularity with leading infrastructure, administration options, and relatively straightforward and familiar fund structures. Mauritius continues to be a jurisdiction of choice for investors for a plethora of reasons. Statistically, there has been an increase in the number of funds licensed by the Financial Services Commission since the creation of the global business sector. Today, we have more than 984 licensed investment funds, including both open-ended and closed-ended funds, with assets worth over 142 billion US dollars. And 657 of those funds are India focused, whilst the remainder is oriented towards Africa. Ladies and gentlemen, please allow me to briefly expatiate on the history of funds in Mauritius. With the establishment of the Financial Services Commission in 2001, the FSC is mandated to regulate and supervise collective investment schemes and fund managers. The FSC has, since then, developed a mature regulatory investment fund framework. Since 2007, the Securities Act provides a framework to capture the formerly fragmented fund industry under a single legislation. The FSC has established a robust framework for the funds industry that captures all types of funds licensed as collective investment schemes or closed-ended funds. In 2008, the FSC further introduced the Securities Collective Investment Funds and Closed-End Funds Regulation 2008, which allow for further categorization of funds and set out the requirements depending on the activities conducted. More recently, the FSC has reviewed the existing framework for special purpose funds, or our SPFs, and that was in March 2021, to ensure that our jurisdiction maintains its position as a preferred investment hub. New criteria have been included in the SPF rules to allow for flexibility and more attractiveness for industry players, whilst at the same time ensuring that it meets international best practices and standards. We have also issued the Securities Real Estate Investment Trust Rules, or the REIT rules as we call it, which was enforced on 4th of September 2021, and which provide for a comprehensive regulatory framework for the operation of REITs in Mauritius. And we have also issued the Variable Capital Company, or the VCC Act, which was enacted on the 14th of April 2022. The VCC Act provides a legal framework for, inter alia, the incorporation, conversion, structure, operation, and termination of a VCC. So let me deep dive a bit on the VCC. The Variable Capital Company Act is another achievement for Mauritius, reinforcing our position as the region's international financial center of substance. VCCs are a new type of vehicle which will complement the available type of funds structuring in Mauritius. VCCs, which are authorized by the FSC, can be set up as a standalone investment fund or structured as an umbrella of funds with underlying sub-funds and special purpose vehicles, or the SPVs, within the same entity and holding segregated portfolios, thereby facilitating the segregation and ring fencing of assets and liabilities of each of the sub-entities. A VCC may be used as a vehicle for both traditional funds and alternative funds, including hedge, private equity, real estate, and infrastructure. Our enactment of the VCC Act thus enhances the jurisdiction's competitiveness as a domicile for investment funds by introducing a tailored corporate structure that dispenses with elements of existing company law that were not conducive to investment funds. Before I share with you some of the features of the VCCs, I would like to emphasize that the FSC licenses both funds and fund managers, which is a unique attribute of our funds industry. A VCC boasts a remarkable palette of characteristics, making it very attractive to fund promoters and investors. Indeed, first, a sub-fund of a VCC will operate as a CIS or a CEF of any category and may elect to have a separate legal personality from that of the VCC fund. Second, as the share capital of a VCC will always be equal to its net assets, it provides flexibility in the increase and reduction of the capital. The VCC structure allows a fund promoter to set up several sub-funds and special purpose vehicles within one structure, thereby leading to economies of scale. The VCC would have one board of directors, CIS manager, CIS administrator, and custodian for several sub-funds, thus proven to be a cost-effective solution. Further, unlike a protected cell company or other types of multi-fund structure, a VCC can consist of both CIS and CEF of any category. As an illustration, a VCC can consist of a sub-fund approved as an expert fund, another one as a PCIS, while another one as a retail CIS. The assets and liabilities of a VCC would be segregated so that no sub-fund special purpose vehicle would have to incur liability of other sub-funds special purpose vehicle, thus providing protection to investors. The Variable Capital Companies Act has the additional feature of allowing a sub-fund special purpose vehicle to be incorporated and therefore providing a further protection from creditors and other sub-funds or the special purpose vehicle. Continuing in the enumeration of the characteristics, a VCC would be able to pay dividend without the need to apply the stringent solvency test provided under the Companies Act. In addition, a fund of a VCC can pay dividend out of capital. This feature is very attractive for investment funds, as it would allow the latter to make contribution once there is disinvestment. Sorry, it will allow the latter to make distribution once there is disinvestment. VCCs are liable for taxes at the level of the sub-funds, as the sub-funds would be authorized as CIF or CF and will benefit from partial exemption regime. That is, they would be taxed at 3%. In addition to the VCC Act, a VCC fund needs to comply with all the requirements under the Financial Services Act, the Securities Act, the Securities Collective Investment Schemes and Closed-End Funds Regulation 2008. Thus, as a VCC fund falls under the definition of financial institution under the Financial Intelligence and Anti-Money Laundering Act, which is our FIAMLA, the VCCs are subject to all the AML-CFT requirements, including the appointment of Money Laundering Reporting Officer, Deputy Money Laundering Reporting Officer, and Compliance Officer. Conduct of independent audit, etc., and will be applicable at the level of the VCC fund. As such, VCCs operating from Mauritius are subject to the prevailing legislative framework, to which the funds and fund managers are subject to as well. Further, we have provided recently for the funds a fast-track licensing process, and I'm pleased to highlight that VCCs are also subject to the new streamlined process for applications. Applications are assessed based on information provided on our licensing platform and on the confirmations, undertakings, and declarations submitted, following which the licenses are granted for a completed dossier within 10 to 12 working days. So, setting up a VCC in Mauritius is synonymous to benefiting from a politically and economically stable environment, which you would agree with me is yet another factor that contributes to the ongoing attractiveness of Mauritius as a funds and investment destination. So that was the concluding note, and I take this opportunity to thank the ZN Group Limited for having allowed me to highlight the attractiveness of the VCC fund in Mauritius. So on this note, I wish you fruitful deliberation on the results of the GIFCS 33. Thank you.
And thank you very much, Bikash, and we'll be coming back to Bikash later in the discussion, and we can talk a little bit more about the VCC funds approach, which of course exemplifies exactly what this index is about, helping various centers both respond and learn from each other. And now, if I can, I'd like to hand over to my colleague, Mike Wardle, who's the Chief Executive Officer of ZN Group and head of our indices, who's going to talk about today's launch, which is done in conjunction, as we said, with Mauritius Leading, but also with the China Development Institute in Shenzhen, our long-term colleagues and partners on this index. Mike, over to you.
Well, thank you very much, Michael. And thank you, Bikash, for your presentation. It's really good to engage with what's happening in financial centers across the world. So first of all, a word about the program under which the GFCI has published. The ZN Group has been running a long finance program for some years. And one of the things that we focus on in the long finance program is, first of all, the question, how would we know that the financial system is working for the longer term? One of the things we've therefore been tracking for a number of years, from the original research done in 2005, is the development of financial centers across the world. And as Michael mentioned in his introduction, we now publish regularly 3 different indices. First of all, the Global Financial Centers Index, then the Global Green Finance Index, and finally, the Smart Centers Index. Each of these are published every 6 months to keep in touch with what's going on across the world. And each of these indices is a factor assessment index. This means that we combine perception data through a survey we run of people's views about financial centre and commercial centre performance. And we combine those views with a set of quantitative measures, the instrumental factors in the report, which are drawn from a wide range of sources. And we combine those using advanced statistical methods to create the GFCI index. So coming on to GFCI 33, first of all, who are we tracking? In GFCI 33, we are rating 120 financial centres across the world. And one of the things which has been a feature of the GFCI as we've developed is the continued growth of the market in terms of international financial centres. We're also tracking 10 other centres as associate centres who may well enter the index at some point. When we first published the index back in 2007, there were 46 centres, which just shows the growth of international finance activity over that time. In terms of engagement with the financial professional world out there, first of all, you can see on this slide who responds to our survey by sector, and a really good range of people drawn from the financial services community. Secondly, respondents by region. A lot from Asia Pacific, where there are a large number of financial centres, a number from China and Western Europe, but each region represented in giving their views on financial centre performance. And so the headlines for GFCI 33. First of all, New York retains its place at the top of the table, and I'll go into more of the headlines more recently, but one thing to note is that at the top of the table, there has been a general fall in ratings in this edition. That's not huge, but there just tends to be a small shift in people's attitudes towards financial centre performance, and it's slightly downwards amongst the leading centres. And I mentioned New York being in top position. It has been now in first place since GFCI 24, published in 2018. London, Singapore and Hong Kong retain their positions in second, third and fourth place, and San Francisco is close behind in fifth. At the top of the table, Chicago, Boston and Seoul have entered the top 10, replacing Paris, Shenzhen and Beijing. And now it means that we have in the top 10, 5 US centres, which is really reflecting the strength of the US economy. And just to say that the data on which the index is based came before the current banking difficulties we've seen in the US and in parts of Europe. We'll see whether that has an effect on future ratings when we come back to the index in the autumn. Leading Chinese centres fell back a little. I think the sentiment is that Chinese centres have perhaps suffered through the fact that China was tightly closed down during the COVID pandemic. As China starts to emerge from that position and is more open, then that again may lead to a bounce back for Chinese centres. Just commenting on the position of London, it does retain its position in the index in second place. And there have been people predicting a downturn in London's fortunes, and we think that London retains its reputation in financial services and the UK's financial services remains competitive. We'll continue to watch this, but we've been watching carefully the position of London since Brexit, and we'll continue to do so. We separately published in the GFCI 33 a FinTech ranking, where New York retains the leading position, followed by San Francisco, London and Shenzhen take third and fourth position. So people's views about FinTech and centres is rather different from that in the main index, and if you're interested in that, please do dig in. One of the things we can do, of course, in the index is track performance over time, and this slide shows in each region of the world that we track the top 5 centres average rating over time. Various things to note from this. First of all, that the leading centres in each of the regions are closing in terms of their performance over time. North America is the leading region in a sense, with Asia Pacific close behind, followed by Western Europe, but each of those are very close on this measure, suggesting that leading financial centres across the world really are performing in a highly competitive market. In terms of the top 5 centres, we'll see that there's been a slight decline in the general rating of centres at the top of the index over the last couple of editions. And you'll see that New York and London in this edition are static in the ratings. They just maintain their position, with other centres falling back very slightly in this leading group. I mentioned the fintech rating, and here's the overall results. I mentioned New York, San Francisco, London, Shenzhen, but it really is at the top of the table. Chinese, US centres taking most of the leading spots, with Singapore, Seoul, Hong Kong, Sydney in the mix as well. So another way to look at this, and fintech is regularly cited when I speak to financial centres as a kind of key determinator of innovation in financial centres. So these may be centres to watch for the future. I'm going to take a brief tour of some of the regions of the world. First of all, the leading centres in Western Europe. As you see, there's mixed results, but there's quite a few centres that have moved up a few places in the rankings. London maintains its lead, with others really tightly packed in the region, following on behind. In Asia Pacific, the leading centres still Singapore and Hong Kong, Shanghai, Seoul and Shenzhen taking a leading place, and again very tightly packed. Only one rating point difference quite often between centres at each rank of the index. US centres have been doing particularly well in the North America group, and you'll see that Los Angeles, Chicago, Boston, Washington, Atlanta, all moving up in the rankings in the index. And we welcome in this edition of the index Minneapolis and Paul as the latest addition to the GFCI, and we'll watch their progress as well. Finally, on Middle East and Africa, generally performance has been a bit slow for these centres, with quite a few dropping in the rankings. You'll see Mauritius has bucked the trend, moving up 11 places in the ranking and 15 points in the ratings. One of the reasons for inviting Vikash to join us for this occasion. So Mauritius is seen to be doing things right at the moment, and we'll just need to maintain that progress. Just briefly to comment on reputational advantage, this is where we track the results of the GFCI survey, the perceptions that people show when they rate financial centres against the overall GFCI rating. This allows us to track centres which have what we describe as a reputational advantage. That is, people rate them as financial centres higher than perhaps the quantitative data alone would suggest they might be rated. And you'll see that in this leading group in the reputational advantage centres, it includes places like London, New York, Singapore, some of the leading centres. But there are other centres which seem to have a very good reputation and may need to do more to develop their ecosystem and improve their ranking in the instrumental factors. At the other end of the table, we have a number of centres which have a reputational disadvantage. This is where people in the GFCI survey rate people lower than we would imagine they should based on the quantitative data alone. And for these centres, the task may well be one of marketing. People don't know enough about the strengths of the financial centre, and we suggest that there is a scope for them to be more active in marketing their real strengths. I'm now going to hand over to Michael Manelli to give his observations and comments on the index that we're publishing today.
Well, thank you very much, Mike. It's a real delight to see the development of this index over so much time. I just had a few slides I'd like to show to pull out a couple of minor points. The first one looks at areas of competitiveness across the 5 sub-indices of environment, human capital, infrastructure, financial sector development, and general reputation. What you see here is something we've noticed over many years now, and that's the fact that the leading centers get it all right. I know that's a bit of a truism, but you can see here New York leads on every factor. You can see London comes in on every factor in number 2, and then it starts to break up and fragment a little bit at the third rank, with San Francisco, Singapore, etc. On the way down. I think what we do get from here, though, is a feeling of change in the industry, as things are genuinely leveling up, leaving New York to one side, which does have a clear advantage and has quietly crept up index after index to the point that there's some serious 30-point clear water between New York and everybody else. Meanwhile, London, as you saw on the earlier slide on Europe from Mike, is being caught up by a variety of European centers. So you've kind of got New York up here, and then a cluster of European centers, all are running quite neck and neck with London. Equally, it's been the same thing over in Asia. We saw a lot of changes at early times in the index some 15 years ago, with the rise of China, which many people thought wouldn't be capable of sustaining many financial centers, and of course now has a plethora of them. But in truth, the Asian centers are all clustered. It looked for a moment or two as if China might clear away from the pack and lead, but actually it seems to be a cluster of Asian centers as well, tightening up. The next slide looks at 8 areas of the sub-indices for the various sectors. And you can see here on these 8 columns, the banking, investment management, insurance, professional services, government and regulatory, finance, fintech, and trading. And again, same situation. New York, very, very much the top slot. London, ways down, but holding on to all of the slots in the number 2 position. And then again, it begins to fragment. Here, with a weight towards the Pacific, with San Francisco, Singapore, and Hong Kong, and then plowing down as well. What I think it characterizes this, though, and this is something that we are looking at adapting in our index, we put in is the role of technology. Obviously, we put in a fintech angle on this some years ago, but we begin to think in some ways that this is changing the nature of the industry. Years ago, if you talk financial services in San Francisco, for example, people might mention asset management and a bit of West Coast insurance. Of course, now San Francisco is seen as a very, very powerful center, largely because of fintech. And we're also seeing the same thing emerging with Shenzhen in China. So it would appear that fintech and, well, probably just more technology is integrating with finance and becoming a lot more important than the weight of tradition or where the capital is managed. And this blend of finance and technology continues and makes the index interesting, but one that we need to improve in terms of our analysis. Mike did mention, of course, that London has gone up quite significantly in the fintech ratings. People wouldn't have traditionally seen London as a technology city. In fact, we have more scientists, technologists, and engineers working in the city of London in its nearly 600,000 workforce than we have people working in banking and insurance combined. So the nature of the industry is undergoing transformation, and we can see it here. I want to turn to my final commentary slide to give you a bit of color. At first, we look at factors affecting choice of location, and these spider diagrams can be overinterpreted. But what we have, if you start at the very top and go anti-clockwise to the left, access to customers, very obviously, trusted legal and arbitration system, want digital infrastructure, good quality regulatory system. These things are fairly obvious, but I would draw your attention really to 4 areas. The first is they're running at roughly around 7:30 p.m. We have existing strength in your sector. People are becoming much more open to locating in various places than they have in the past. I think the second thing is to look as you move around roughly to 5:30, the commitment to sustainability. Now, we know that green finance is a big key theme amongst all of the financial centers. We know that green finance is a way in which many centers are hoping to compete or showcase their offerings in a very good light. But when it comes to affecting the choice of location, green is still not really that important. And this contrasts in many ways when we look at our global green finance, we look at our green finance centers index, that there people are very concerned about it, but within the overall mix, the weighting is not really that heavy as yet, despite the verbiage. I would also draw attention to two other factors up on the top right around the 2:30, 3 o'clock mark. And the first is air connectivity. Looking at that down there at 2.15 being the mark for that. Wow, that's extraordinarily low. And I think that is very much, we think that's very much a post-COVID relic that people are now recognizing that transportation, air transportation, isn't quite as essential as it used to be. That used to be much, much higher. And the other one I draw attention to is availability of language skills in the workforce. Skilled workforce and the availability of talent are very important. But I'm wondering personally if it's just an assumption that to work in finance at any significant level internationally, your basic English skills must be sufficient. That's taken as a given rather than as something that people were looking out for. This might also, of course, indicate, as we've seen in many areas, that various chatbots and other tools are taking a large chunk out of the outsourcing industry, where the outsourcing industry was relying on large call centers. So that may be there. And in fact, in the interest of talking about technology, I might point out that the cover of GFCI 33 was actually produced in conjunction with OpenAI's DALL-E, D-A-L-L-E, which is their automatic image generator. And Mike produced this looking at 10 mountaineers, but it was asking a chatbot to produce that cover photo for us. So I think that covers most of the things that I wanted to draw out for all of you. And we now turn to questions, comments, and observations from those of you out there in the audience. And you can see right here some of the points we make on the slide cover there, all generated by an AI. So Mike, great to see you back. And Bikash, I was wondering if you wouldn't mind coming forward and we can have a nice discussion here with the audience. Mike, just before we get going, did you want to say anything further about that cover and why it was a bit of fun this edition?
Well, yes, we had the idea of using DALL-E to produce the cover. And what I learned was that you have to be very specific in generating the images. I started off with give me an image of mountaineers approaching a summit. I got an image where they were facing the camera, and not good. So then you say, give it to me in silhouette, and then you say, so you keep refining the search terms, and the images just get better. But it was just an exercise in exploring what the technology was able to achieve.
Great. Well, we've got a few comments here. I'd like to start, if I could, with Hugh Purser. Hugh is asking us, are you able to give an example, Mike, of direct government action in a particular center, which has dramatically improved the center's standing in the main index or some indices over a relatively short period of time? And that's what can you do that's hard and fast? Or I guess the parlance is, what's the low-hanging fruit for some centers?
Sure. In terms of direct government action, the main things that we see are places that take the opportunity to legislate for new ways of doing things. And the particular examples would be places like Dubai, places like Astana in Kazakhstan, where the government has been instrumental in setting up economic zones which are specifically designed to assist in the development of financial centres and financial business. And so it's things, for example, like in both of those examples, setting up a place where common law governs business transactions rather than local law, a culturally significant change, but actually something which government have been able to do. Other examples, I think, are where places like Mauritius, where the government has worked with the regulator in particular to ensure that that issues are addressed quickly and forcefully. Where, for example, where the FATF grey list has been placed against a financial centre. The other thing, I think, the other big example is Singapore, where the history of Singapore, if you go back as a financial centre, is really the government leading its strategy discussions across the economy to decide where the priorities lie, and then coming back every 5 to 10 years to have that conversation again, and putting their backing behind, for example, human capital development in Singapore, putting their backing behind the development of particular sectors. And we've seen that, a dramatic rise in Singapore's performance over the years. So there's some examples of things that governments can do.
Okay. Mike, another question. In the table 3 on page 8, you examine the 15 centers likely to become more significant. And Seoul was mentioned 256 times, Singapore 111, Kigali 97, and then so on. But Seoul, that's an outstanding result there, clearly pulling away from the rest of the pack. And how is that coming? And what's the speed at which you might see the effects of people's considering it likely to become more significant?
Well, yes, this is drawn from the GFCI survey, where we ask people to identify those centres that they think will increase in significance over time. So it's a slightly subjective thing, but there's obviously a large number of people in that part of Asia in particular who think that Seoul has a very bright future. Seoul's a very ambitious centre, and would like to see itself moving into the top 5 in the world. It's currently ranked at 10. And really, I suspect that this is where centres who are really ambitious have been made clear their ambitions, and people are picking up on that and thinking, actually, yes, they're serious about making improvements over time. And I think that's what this measure reflects.
I spent 3.5 weeks in Japan recently, back in January, and met with officials at Tokyo and also in the fintech area. We've also hosted here in London the mayor of Tokyo, who's a wonderful politician, a very inspiring woman. And I'm due to go and talk quite seriously just in a week or two with the Institute of Directors in Japan here. So I've had quite a bit of a Japanese session, and I think Tokyo is extremely strong. But Nobuhiro Yamaguchi asks, among the Asian countries, Tokyo has dropped to 21st. That's 5 places in just the past 6 months. Any thoughts or explanation? What's the main reason behind this drop?
It's difficult to say. There's obviously there is a drop in the ratings given in the GFCI survey to Tokyo. One of the things we think is going on, that Japan was quite closed down during the COVID pandemic, maybe not as able to engage with other parts of the world as much, in a similar way maybe to China. And this does seem to have an impact. It was in last edition of the GFCI as well that Tokyo dropped a few places. It's not to say I think that that's a permanent kind of change, but my view is that probably that relates to just the feeling that Japan didn't open up as quickly as other places, and maybe there hasn't been as much contact with colleagues in Tokyo as there might have been. So it seems to be a perception issue. Tokyo may need to work quite hard on reconnecting with its colleagues across the world.
Mike, one of the things that we frequently have when we're discussing the development of centers, as I was recently with a major Asian country and a mayor of a city of some 20+ million, was people seem to believe that they need to pile it all into one spot to be huge and big. And yet what's always stood out in our indices has been the strength of Switzerland, a country of 9 million. In other words, the population is actually about the size of London, in fact, much, much smaller than the London metropolitan area with 22 or 23 million. So, and yet it sustains 2 financial centers, Geneva and Zurich. Maurizio Fazzari would like to know, what do you think about the recent Credit Suisse event, where Credit Suisse was acquired in situations in extremis by UBS? And what do you think of the role of the Swiss authorities here?
Yeah, Yeah, I mean, actually, there are 3 centres now listed in GFCI from Switzerland, because we are also tracking Lugano, which comes a bit further down the table, but it's there, and it just shows that some smaller economies are able to support a very strong financial industry. In terms of banking and the recent issues of Credit Suisse, obviously the data on which this index was compiled was before those events. What we've seen previously, where there's been problems in financial sector, banking sector, is that as long as the regulatory bodies are seen to have acted properly and swiftly, it doesn't appear to have a major impact on people's perceptions of the general strength of financial centre performance. Where the regulators have not been on top of things, that is where people's perceptions do change. So part of the answer is that as long as regulators take prompt and appropriate action, people are unlikely to economy or replace. That said, the jury is out on how people will view and we'll need to look at the next edition of the index to see whether that's had an impact.
Okay. Mike, as we're looking here at a variety of centers, Hortense Mudengi is curious, saying it's great to see some of the centers who've done well in the index, such as Munich, Mauritius, Amsterdam, moving up the ratings, and I believe Hortense is looking at this with a view to Africa and African centers as well. Can you see any common thread? What's been the key driver behind this?
I haven't seen a common thread. So the data that underlies the index shows, as I say, these 2 sets of data: one, the perceptions, and secondly, the quantitative data. Somewhere like Amsterdam has been strong on the quantitative data and continues to inch up in relation to other centres. Other places are improving their ratings in the GFCI survey, so there's no common thread to this. And I also hesitate to make too many judgments based on one edition of the index. What really matters is trend over time. And so we're looking, maybe, we've talked about Seoul a little bit, who have been steadily moving up the index rankings in recent years, paying attention both to their marketing and talking about themselves and what they do, but also looking at their financial ecosystem and trying to ensure that they're doing the best they can. And those centres which over time will move up the index are those that are paying attention to both of those areas, to making it a really good place to do business, making sure they've got a strong skill base, making sure their infrastructure is leading, but also telling the world about what they're doing.
Fantastic. Well, Mike, we've run to the end of time, as you're aware, and I would like to thank you for that commentary. I would also like to sincerely thank Bikash for taking the time to open it and explain the VCC structures in Mauritius. And we hope to see a lot more from Mauritius, as it has been making great strides in what it's doing. Mike, next time, of course, I'm terrified that you might produce this entire thing using ChatGPT or something, but heck, it's a changing world out there, and a lot of people, when we began this, thought 6 monthly would be too frequent, but actually, as we've seen, geopolitical changes can adjust ratings very, very rapidly. Take the case of Russia and Moscow only last year. So things do move in this world, and it's becoming oddly richer and more interesting the more that we've analyzed it over the last decade and a bit. So I'd like to thank you for all the preparation, Bikash for the preparation, our sponsors for all this, particularly, if I might say, the China Development Institute, who works very, very closely with us on this. I'd also like to point out that next month we will be launching the Global Green Finance Index in its iteration with the support of Abu Dhabi Global Markets. So there's quite a bit happening out there happening here at ZN. And I would like to thank you, the audience, for coming online today and participating. Questions are always open, but also ask your friends who know about finance to fill in the survey if you wouldn't mind. We look forward to seeing you on many FS Club webinars in the future. Thank you all.
Thank you very much.